Hi, everybody. I'm Ross Healy, the chairman of Strategic Analysis Corporation. Welcome back to our Friday Focus SVA In Action series, which, by the way, has replaced our previous long-running Fang Friday webcast. Before getting down to business, I think I need to say a word about the stock market. Both the Standard & Poor's and the NASDAQ in particular, they remain in a rally mode. When I closed down the Fang Friday, both of them were at valuation peaks, and both of them have had a one breakpoint setback and are rallying up from there. Now, one thing that I do know about high technology bull and bear markets is in bear markets in particular, those rallies can be really powerful. And a kind of a FOMO feeling sets in, fear of missing out. That is going to go on and on. But of course, when you look at the stocks themselves, that they're not making new highs. But that's the way that it feels. And I think the same thing is happening right now. And that brings me to the Magnificent Seven stocks, which I warned you about at the beginning of the year, were at valuation tops. Okay, with both the Standard & Poor's and the NASDAQ having a one breakpoint setback and are rallying up there, so are the Magnificent Seven stocks as well. And of course, many other NASDAQ stocks as well. And the question is, now what? But first, a reminder as to what SVA is. SVA, or Structural Valuation Analysis, is a balance sheet based approach to the market which kind of merges fundamental with technical analysis. And the lines that you see on my charts are basically modified price to book breakpoints, and they apply equally to all stocks and all stock indices that we have ever looked at. The dotted lines on the charts are our measure of the intrinsic value of both stocks and indices alike. Anyway, if you'd like to learn more, please go to strategicanalysis.ca. Okay, turning to the Magnificent Seven stocks, I left you hanging right at the top of the market. Although I said at the time I couldn't see anything more from those stocks, and indeed my exit from the Fang Friday webcast turned out to be perfectly timed. The markets as measured by the S&P and the NASDAQ were perfectly right at their SVA peaks, and since then both have had a one breakpoint decline and are rallying. Now, I have to admit that I missed reviewing the stocks at or very close to those market lows, and we missed some very nice rebounds, as we'll see. In the future, I will attempt, no promises, mind you, but I will attempt to do my Mag 7 reviews at market levels that SVA tells me might be turning points. I have to tell you right now, I'm probably biting off more than the market will allow me to chew. But the first rebound off the recent bottom was clear, as we'll see in a moment. So I'll give it my best shot. Anyway, on to the Mag 7 stocks, and let's start off with Amazon. And here you can see Amazon bottoming perfectly at its MSG price. That's 5.5 times book value, and that's why it bottomed before, by the way, in 2022. And indeed, if I push it all the way back to 2000, we'll see that that's also where Amazon has bottomed. So it's got a perfect bottom configuration. Now, turning to the rest of the stocks, look at Microsoft right here. It almost got to the bubble price, and you may remember way back when I said, look, I am waiting for Microsoft to get to its bubble price, and it did. Well, it almost did, and it's been rallying nicely from there. Apple, you know how I feel about Apple. Very little growth in either sales or earnings. And I'm wondering, when I look at the fair market value way down here, what on earth this stock is doing way up here. Anyway, it had a one breakpoint setback, and as you can see, a perfect hit and a nice rally from there. Tesla had actually had quite an interesting experience here. It actually dropped all the way here from its HB4, which is 24 times its book value, down to its HB1. I think Elon Musk was he was almost crying in Trump's office. Anyway, it's managed to find its footing at its HB1, which is 9.5 times book value, and has been bouncing along ever since and has broken out from there. The HB3 would be my next target on the upside. See what happens when it gets there. Now, Alphabet broke down as well, but it's got a very curious kind of configuration, doesn't it? It's sitting there right up against its MSG price, that's 5.5 times book value, and it's been struggling to break out, and it still hasn't done so. So I would watch that very carefully. It's very close. They're $168, but we'll have to see if it can actually do it. NVIDIA is actually characterized by what I would call fairly sloppy trading. It's well down from its high, no question about that. But as I say, some sloppy trading. And when I look at the fair market value, it's flattening right out. And I wonder how long this rally will persist. Meta, again, a stock it was hard to call, broke support at its bubble price at 7.4 times book value, fell, rallied back up again as a good stock technically should. Rally, breakdown, set back again, didn't go all the way to its own MSG price, again 5.5 times book, before it's rallied and is now broken out. I'm uncertain about this company. When I see the trend of the fair market value, it doesn't look as if it's going anywhere. But now where key support is, it's the bubble price at $610 right now. Netflix just carries on cheerfully in its own way. Its fundamentals have really been doing well, and the company looks as if it's breaking out and potentially moving higher. Now, those are the Mag 7 stocks. Turning to the rest of the NASDAQ, we see that they behave just exactly the way that the Mag 7 stocks. Here is Advanced Micro Devices, AMD. Look at that. Broke support at its mid-growth price. Okay, that's 2.5 times book value, and plunged perfectly to its growth price and has had a nice rally there, moving higher. I don't know how far it will go from there, but to talk about perfect timing, eh? And finally, I'll look very briefly at Micron Technology as well. Same story as AMD, a one breakpoint decline, and is now rallied all the way back to its G price, its growth price. That's a price to book of 2. Anyway, in conclusion, here from the SVA charts, I think that you can see that two things can happen at index valuation lows. Namely, you get stock markets hitting a bottom and the stocks follow. Having access, therefore, to the SVA service is vital in bear markets, as they are trading markets, not buy and hold markets. Anyway, that's all for now. Have a great week, and I'll see you next Friday.